today was the day of the big V in the stock market. The markets, the entire world actually started falling down. So we had the S&P 500 fall, we had the Nasdaq fall, we had the Dow Jones fall, everything was falling. And just when we thought that the sky is falling down, the market took a big V. So today we're going to look at the S&P 500, the Nasdaq, and look at some technical analysis and the sectors and just see what's in store for the rest of this week. So stay tuned. Okay, so now the first index we're going to look at is the S&P 500, and over here you do see the big V in the stock market. So the market has been trading down since the last couple weeks now, and what you see on the extreme right over here is a bullish engulfing pattern. And what this means is that if you look back in history, a bullish engulfing pattern shows you that there is buyers in charge of the stock market now. So it doesn't mean that the stock market's going to rise all the way to the same levels that we came down with, but it does mean it's a strong bullish trend that you can see right now in the stocks. So that's the 4-hour time frame. Let's look at the daily time frame now. Now, if you watched my previous video, you will notice that we talked about the 200-day moving line. And the 200-day moving line, this is on the daily. The 200-day moving line is of very, very important. So the 200-day moving line seems to be something that has given the stocks a bit of resistance. It did go down all the way down to 4,211, and once it hit those levels, it then bounced back, and that's from the daily time frame over here. Now, it did try rising up to 4,407, so there is a slight increase. And now let's look at the weekly chart for the S&P 500. So the weekly chart too, so this is the 50-day moving average line. And the 50-day average moving line, the stock seems to hold ground to the 50-day moving line. So that's again a good sign that the stock is not just falling to the ground, but it's trying to hold its ground and try to go up as well. If you look at the monthly is holding close to the 20-day moving line. That's the one over here. So what does this all mean? So if I look at the daily time frame right now, the 200-day moving average is very important. It seems to bounce out of the 200-day or hold its ground strong on the 200-day moving average. So if this was me and I was putting money in the market, I would probably be cautious. I would never short sell or not short sell into anything right now. Just be cautious. Let this 200-day moving average line on the daily time frame tell us what's in store next. So if you see the stocks rising higher, the 200-day moving average line seems to be of good resistance, and the stocks will start bouncing back. Now, how much will it bounce back? That's what I'm going to talk about next. So what I have in front of you is the big decline that we saw in March of 2020. Now, if you look at the same decline, it's not the same extent that we have right now in our mini decline in Jan 2022. But if you compare this decline here, you will notice that the stocks would rise up. Now, this is the index. So the index rose up, touched the 20-day moving average. So that's the yellow line that you have on my screen. And it then bounced back a little, and then it tried to break it, and then it held resistance or held ground on the 50-day moving average line. So if I go back to current day, what I would predict, now it's just my prediction, but what I predict is that the stocks will try bouncing out a little and touch the yellow moving average. And once it touches the yellow moving average, it may then try to break it, or it may start declining down further. If it breaks this tomorrow, and tomorrow you see another decline, then the markets are going to soar down a little more. And where would it stop? So I would then look into the weekly chart, and the line that I would keep my eyes on is 4319. So that's the strong 50-day moving average on the weekly chart. So whenever you're looking at a chart, first comes weekly. Weekly is the strongest. Then it's daily. Then it's a 4 hours. So the 4 hours is something you don't pay attention to unless you're trying to get in or get out, or the daily is when you get in and get out. The weekly is the most important. So keep an eye out for this number 4322. That's going to tell you a lot about the S&P 500. Next, we look at the Nasdaq index. So the Nasdaq index again, the grade B again, it seems to have fallen down almost 4% today, and that's like a record. Like it's not fallen down almost until March of last year. So that's a big decline that we've seen again for the Nasdaq. Now, Nasdaq being a stronghold of technology and technology taking the biggest hit in 2022, that's where we've seen the biggest decline too. So if the technology falls, Nasdaq falls the hardest. So we've seen a big rise up. So like, again, this is again a bullish engulfing pattern that we see for Nasdaq year two. Now, an important thing to keep in mind, again, as I talked about the S&P 500, is how much does it rise? Now, something that you notice here, the S&P 500 held its ground on the 200-day moving average. Nasdaq has broken it, and that's a bad sign. That's a bad sign. So the Nasdaq could have a tendency of actually falling down further. So let's go back in history and see how did it perform in March 2020, because that's another decline that compares very close to what we have right now. So if you look at March 2020, you'll see that Nasdaq did break below the 200-day moving average. It went down further, sunk further into the ground, and then came back up. What this tells me is that there is still hope. It doesn't mean that if it broke the 200-day moving line, it will still go down all the way till like zero. So that's not going to happen. So don't worry about that. Don't fear about that. So what I would do now is I would pay close attention to how does the market react to this right now. So to give you a better picture, look at the weekly chart. So the weekly charts, this is the 50-day moving line. Now it is below the 50-day moving average. So I would be cautious not to go aggressive into Nasdaq, or if you're trading stocks, don't go trade aggressively into the technology stocks right now, because there could be a possibility that it may decline further. What I pay close attention to is to look at, does it actually touch the yellow line, or how close does it get to the 20-day moving average? So do you see a bounce back, or is this a trend for a further decline? The monthly charts again is holding one of the most biggest declines we've seen in a few months now. So there's nothing that is close to comparing to how much that the Nasdaq has fallen in a month. Let's quickly look at how the Russell 2000 has performed. Now, if you notice something, the Russell 2000 has already cleared the 20-day moving average. So that's a good sign. So the Russell 2000 consisted of the smallest companies, and the smallest companies fall down the hardest. They're not the Netflix, the Googles, the big companies that we have. They're the smaller companies. So if the market takes a hit, the small companies fall down the hardest, and that's what we've seen here. The companies have actually plummeted to levels that we've never seen in the last year at least. So when the market goes up now, the Russell performs the best, and that's what we've seen here. The market's gone up almost 2% in a day on the Russell 2000, which is a really good sign of an optimistic market. Now, one more stock that I want to show you, this is an index actually, is the Euro Stocks futures. So the Euro Stock futures too, again, has showed a similar V that we saw in our US markets, and it's also moving higher and higher as we see for the aftermarket session today. Now let's look at the sectors and see how they have performed. So if you look at the sectors, everything was deep red for most of the day today, and then we saw the big change in trend and the market started moving higher. So everything's about greenish red. The ones that performed the best was Amazon for the day, Home Depot. So a few of the stock traders will start picking up good stocks to buy. But is this a good time to buy? Hold on, maybe wait for another day before you put your money into the market. And lastly, let's look at the consumer cyclicals. It performed the best. So this is the sectors on how they perform on an average. So today's daily performance, the consumer cyclicals performed at 0.83%. The biggest drawdown was utilities. Now keep in mind, everything was deep red for half the day. So the ones that trended or started trending into the green the first is a good sign. So that means if the market's changing direction, if there are certain sectors that are actually turning green and performing better, those are the sectors that will do good or do better than the average market in the long term. So that's something that you focus on. But do you focus on it right now? I would say wait for another day and let that tell you where the market's heading. So that's it for today. It's short and sweet. If you like what I'm sharing, if you want to know more, stay tuned to my channel and I'll tell you what the market has in store for the rest of this week and for the rest of this month as well. So stay tuned, more to come, and have a good rest of the day.